weekend all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is your weekend edition, and we are now on Friday the 29th of March, the end of a month, the end of a quarter, and what a quarter it was. All the stock indices performed beautifully this quarter, which of course puts into question how are they going to do the next quarter, as the U.S. dollars had a heck of a rally back up, and people will wonder, is that going to affect foreign U.S. companies that are abroad? Don't know. What we know is the market looks good right here, and what we're going to do is first look at a monthly chart, then we're going to go to the daily charts. A market that you also should be paying attention to is energy. It has rallied dramatically this month as well. So first, when we go to the monthly chart, big gain, for the month. Market up strong, as you can see, finishing out with what today, a 2% gain, 2837.50, up 53 points overall. On the daily chart, up about a percentage point, not daily, the weekly chart, up about a percentage for the week, not the day. Again, I'm so used to the daily charts with you. And you can see how the market just keeps lifting up. And remember, this all began on Christmas Eve, and this market has come back, but we shouldn't forget that the market also peaked out up here and went straight on down, so it's made up a large chunk of everything that it had lost. You get to see that when you just put on the weekly chart and you see the peak here in the October time frame where the market fell hard, and just as aggressively it has come back. It's been a hard market for a lot of people to trade. As for the weekly chart, the trend is up. You have a pattern of higher lows, higher highs. I think you'd agree with that. The market is over the 18-week average. It's over the 100-week and the 200-week. We had that one test of the 200-week average back in December. And you know when you're down that much and you get to it, people panic. That's the end of it. I have an older mother, and she is going, what's going on with my portfolio? Blah, blah, blah. And I go, Mom, it's a correction. And now, of course, I'm the fair-haired, I guess you could say, son. Is that the right way to say it? But in any case, I wish I created all this. But now we're up at a point where, obviously, we got to see, can we take out last month's high? Now, last month's high in the market was 28, or last week's high, I said that wrong. Last week's high was 28.66. We got up to 28.40 right now. When we take a look at where resistance might come in is measured by the Bollinger Band. The number comes out at 29.10, back into these old high areas. So that's where you're at on that. If the market were to break here, one of the supports might be the 18-week average of closes, which comes in at 26, we'll call it 90, and then the 100-week, which is 28.60. And notice that even if you fell there, you don't take out a previous break low. So there is room on the current formation if the market, instead of going up first, wanted to back off. What would hurt the market is taking out this week's high and then getting through this week's low and closing lower on the week next Friday. Just giving you the what ifs. That's my job here. So right now, we're in an uptrend, upside bias, momentum pointing up. You still have that 29.10 zone potential target. Last week in the NASDAQ, you went up, hit the upper Bollinger Band on the weekly chart, backed off a little bit, not a lot, but you did break through last week's low, and by the end of the week, you've recouped. The market also has momentum up, trend up, bias up because you're over the 18-week average, but you did hit an upside target, which you haven't done yet in the S&P. In the Dow, the market's got the pattern of higher lows, and if we take a look at this past week's high right here, that high was 26,145. Before that, the high was 26,238. So what we have temporarily is a pattern of higher lows. You see that? And you have to go to this high compared to this one to say that you've got the higher highs, which I will say that we still have. This puts into play the 26,669 or 2695, 26,695 level. I'm having a hay fever attack today. I'm not feeling good. I can't believe it's hay fever at the end of March, but boy, in Chicago, the buds on all the trees are going crazy already. So we're looking how the market's coming up. That's what I'd look for there. Should this market take out 25,213, that would create a problem. The other thing this market's done, it's absorbed what? the Boeing issue, and that seems to be behind the market now as a index. When we look at the Russell, not the same chart. Lower highs, and if we look at this low of this week, we got down to 1497.40 under that. So we have a pattern of lower highs, lower lows. That's a downtrend. However, it's fully countered if the market, in my opinion, closes over the 18-week average. The two nullify each other, and momentum is flat right here, but staying in the bull camp. Now, if it starts turning down with the K line, which is in red, under 80, be careful. It's probably going to get more of a correction in the market. In the VIX, the market's rallying back to the resistance point, the 18-week average of closes. The trend remains lower. Lower highs, lower lows. The 100-week average, not the lower Bollinger Band, became the support. It's pretty hard to get down to that 870 level, and if you watch my daily videos, it's one of the things I've been telling you. As the market on the daily charts gets to the lower Bollinger Bands, the bears get enamored because they go, well, how far can you really go down if I write puts? How much is my risk? Versus a call when you get a pop in a market and you get this action or you get this type of action. Just making that point. In the 10-year note, the market has come away from the 18-week average of closes and popped right on up, staying over the upper Bollinger Band. Now, the odds of staying over Bollinger Bands are 5% of the time, but I came up with another idea years ago where I start counting successive weeks over it. And when you get successive weeks, I count each week as one of those percentage points. So I give the market a 3% chance this coming week of staying over that upper Bollinger Band. Another theory is when you're over Bollinger Bands, a lot of traders believe you can do better coming into the market on breaks. I'll let you work with that one. I teach it all in my charting course, and momentum is up. But is the trend up? No. You have the lower low, higher high. So it's a vertical price rise this market has gone into. In TLT, a strong close. First one over the upper Bollinger Band. In fact, let me go back to last week's. It might have been over it too. It did not. The market was just under it. This is the first week over it. Momentum up, trend up. Higher lows, higher highs. Dollar index in the middle of no man's land. Look at this 18-week moving average of closes. I mean, either side of it, if you were playing for a trend breakout, it hasn't occurred. And this is where traders get chopped up and chopped up bad because they start looking for things to happen and they just don't happen. And you have been doing this, my friends, since November. You peaked out back here. You've come back up to challenge it. You fell down pretty hard. You're back up. I don't see a trend just yet. In the euro currency, the market's got a lower low, higher high. No trend. Again, chopping at that 18-week moving average and not breaking out one way or the other. In the British pound, the market's in an uptrend. It's hard to believe with all that's going on, but it is. If you just had a chart took off the name, you'd say you've got higher lows, higher highs, and you're over the 18-week average. Resistance, the combination of the 100-week and the upper Bollinger Band, so it's hit that target. There's a but. Are you noticing what's going on in momentum? It's turning down. Momentum often turns before price. Canadian dollar in a downtrend. Lower highs, lower lows. To negate the downtrend and start an uptrend, the market would have to take out 75.60 and not get under 74.27. If it did that, you'd put into play the potential, at least, for the upper Bollinger Band. The bears have to defend their position literally right here on the weekly chart if they're going to keep the trend to the downside. In the Japanese yen, this is a pullback that the market's done now on this week. It's down 67 points for the week, right into support near that 18-week average. There is no trend here. You have a lower low, higher high, battling at that 18-week average, momentum pointing down, bias up. On the weekly chart, it's nothing. Bitcoin is in an uptrend. On the weekly chart, you've got the higher lows, the higher highs. The next resistance is 42.23. The support's back at 3,700. Momentum up. I do not look to see if a market's overbought or oversold whenever I go to a weekly chart. On the crude oil, look at how this collapse between the Brent and the WTI has occurred. Now, it's been a pretty darn good month for crude, too, and a good week. The market was up 2% for the week, up at 68.38. And remember, this is a market that was just at 50 in December, and it's come way, way up. So this is a great first quarter for the oil market. The question is the resistance at 71.23 going to be hit? Support back at the 100-week average. If this market were to take out 64.01, that's 64.01, about $4 lower, it would break the uptrend. Excuse me. WTI. You hit the first objective, the 100-week average. You've been making a run and still are towards the upper Bollinger Band. And on the pullbacks as that's occurring, the 100-week is still the support in the market, still in an uptrend. Gasoline, what can I tell you? You've gone from 125 all the way up now to 189. And if you saw my gasoline report that I did, I'm going to say a month ago, I was talking about this. It is now a bit ahead of itself as it keeps hitting the upper Bollinger Band. It did back off this week, 3 cents, but it's still a market that's in an uptrend. Excuse me. Hay fever. As you take a look at the nat gas, lower highs, lower lows, momentum still to the downside, bias down. To break the downtrend, you have to take out last week's high, and that number was 289.70. If you don't take that out, what happens is you could still work lower. The question is, you're now getting into zones that were support in the past. There's a number where maybe this market is getting a bit too cheap, and I'd be a bit concerned about that right here. But the trend's down until you take out that particular number. Now, each morning what I try to do with you is go through 40 charts that are futures and about 4 or 5 that are ETFs. And on those, what I do, and I can't do it here in these videos because the rules say, I'm talking my brokerage rules that I'm ruled by the government. If I'm going to say buy here, sell there, I can't do it to the general public that way. It has to be protected in many different manners with disclaimers and different ways. To make a long story short, I review the charts in this exact manner. What you're able to do, let's assume you wanted to get to the soft commodities, coffee, whatever. You just grab with your cursor and pull to your right over there. If you want to watch it all, you can. You can jump areas. But what I'm able to do in this, because it is a subscription service, is I'm able to tell you, here's the chart action, here's what I think pros are doing. Remember, in September, I'll be 50 years, I think 50 years registered as a broker. It's a long time. I'm going to give you the technical and fundamental ideas, and I am going to throw out trade ideas at you that for the intraday, I'll show you, I'll use pivot points, I'll use some different ideas to back up what we're looking at so that you have a game plan. But you want to know what the real purpose is? The purpose is, I know if you're like me, you're always questioning your trade idea. If you think I don't, you are sadly mistaken. So you look for advisory services that might point out what you want to hear or not want to hear. I don't know you, so I don't know what you're looking for, but I know one thing, I'm going to be pretty consistent. And consistent means the approach I have to charting. That's what I mean by the consistency. So when I say a trend's doing this or that, you'll see why, and maybe that helps you with your own trade decision. You can get 30 days of this for 26 cents a day. $7.95. There's no contract. You're not committing to anything. If you want to then go 30 days at a time, it's $15. If you want a year's subscription, it's $156. Either way, nothing's breaking the house. How do you get this? Go to our website, www.iraepstein.com. Go under Education or Research. Drop down to the morning video. It's all explained right there. I'm Ira. Apologize for the coughing. I'm dying right now. You have a great weekend, and I'll see you Monday.